Hello, everyone, and welcome to another episode of the Financial Advisors Want to Know podcast. I'm Catherine Tindall with Dominion Enterprise Services. I'm a CPA, and our focus in our firm is doing tax advisory work for financial advisors, specifically for their firms. In today's episode, I have with me Steve Taylor. He has a very interesting background starting off in law. He's the owner of an SEC-registered investment advisory firm that provides comprehensive financial planning and investment management services. He's a CFP and attorney based in Miami, Florida. Stephen brings a unique and unparalleled level of expertise to his clients. And today we're going to be talking about his journey from law to IBD to RIA and all of the nuggets of wisdom that he'd like to share with people that are maybe along a similar trend line or are thinking about a similar trend line. So I want to say thanks for joining me today.
Thanks, Catherine. I'm excited to be here.
So I often, when I encounter people who are attorneys who are no longer actively practicing law, they always say like recovering or they always qualify attorney or lawyer with an adjective. Do you have an adjective that you use?
No, I don't, right? Because when you're an attorney, they really put in your head that you're always an attorney. You're never not an attorney, no matter what you go or what you do. So no, I'm still proud to be an attorney. I do, in full disclosure, I do some estate planning for my clients as needed. But no, I left all the going to court and all the stuff long behind me.
Yeah, so I'd love just to dive right into your story. So you got started in law, and how did that end up transitioning into financial advisory work?
Yeah, my story is really interesting, Catherine, in that, when I came out of law school, I actually started going to a CPA firm, right? Something in I started out a big one, Deloitte. They were in law school. They were trying to recruit attorneys. They said, you're going to come out, you're going to do all this great tax planning. So come join us. 1 month in, they had me doing returns. Return, right? And I said, I'm out of there. This is not what I signed up for.
The bait
and switch completely, right? So, I started kind of figuring it out, went to a small law firm, and I had a good friend that was working at American Express Financial Advisors. I said, hey, wow, that's really interesting. That's really cool. Let me go check that out. And so pretty quickly, I like I said, I left the law firm I was at. I actually went to join an insurance company, right? Mass Mutual as an independent technically an independent broker dealer, right? But I signed that agent contract and everything and tried to kind of figure it out. And really, as I started to have my young family, it was better for me to focus on being a lawyer, right? I was better at asking for retainers rather than selling whole life products. So I went out and built that for a number of years. And then, about 11 years in, I was ready for a switch. My wife and I got on the TV show Shark Tank. And we were able to, she had a little, bid product there. And that was able to be a good reason for me to leave the law and move on to this business. But then, about 10 years ago now, I left the law and I said, I want to go do this business. And I started it out by going to a friend who was at an independent broker dealer, which at the time was all that I knew that really existed. And I've learned a lot that wasn't the best route for me.
Yeah. And so I'd love to hear more about your experience at the independent broker dealer and just maybe what were some of the misconceptions that you had in that environment that now when you look back, you realize like, oh, I should have realized that a lot sooner.
Yeah, so it's going to be a similar story to many people out there on independent broker dealers, right? They're going to be practicing moving along and they're just going to start butting their head. They come up against this, they come up against that, right? As they start to understand, what's out there. And that really was, a lot of the story, but also it was the amount of, percentage they were taking. And I said, why are you what's the value here, right? What are you doing for me? And I was using at that time, and I still do use an outsourced asset management provider, a TAMP. And really, as I started diving into it, I said, they're not really doing anything for me. I don't see it. So let me go research and peek over the other side of the fence and see what else is out there. And really, it was just completely eye-opening. You have no idea. I mean, one of the things I'll tell people, if you're at an independent broker dealer and you think the business is a certain way, it's not. That's just the rule they impose upon you, right? Talk to RIAs, go do your research on your own. There's so many other things out there. So when I started peeking over that bridge, that fence, and seeing everything that was out there, it just became compelling. I'm like, once I really, educated myself, I'm like, I can't stay here anymore. This makes no, it makes no sense to myself, for my clients or anything. I need to leave.
Yeah. And what do you feel like was the biggest gap there in terms of where you felt like it wasn't a good fit?
Yeah. So the issue with, and I'll come back now saying, having gone through it, right? The broker dealers are set up, okay, to try to help out and to help people who want to sell primarily commission-based products to distribute them and be compliant, right? When you have all these different products coming your way and people, with all these different bells and whistles, you are better suited at a broker dealer, right? Because they are going to have made provisions for it. If you read their compliance manual, it's like 1,000 pages long, right? To take into account all these different things. And you want to be protected to a certain extent that, when a regulator comes down, that's a pretty good place for you to be if you're doing that. But if you're not doing commission-based business and you want to give advice and do, fee for advice, then really all the barriers and all the, the limitations that they put up are not needed. It's 10 times more complicated for you to stay than for you to go, right? And that's really the biggest issue there. And a lot of people say, well, I'm an independent broker dealer, but all I do is fee-based business. Great. Then why are you there? Because they're putting up all these barriers for you that they have to. Because there's 1,000 other advisors who are doing all these other crazy things, and nothing against the broker dealer. That's how it needs to be. But if you're not doing that, you don't need to be there, because they're putting complexity in there that doesn't even apply to you. They're taking money for really, overhead for you for compliance, which is more complex. That when you go on your own, it's easier and cheaper. And there's really, there's no value anymore for you being there.
Yeah, no, absolutely. Like, I had a client recently who made the transition to RIA, and he said on the cost structure piece alone, he left because of reasons of wanting more independence and more of a, what he says was a fiduciary relationship to the clients, and not being, it was more on a fee thing, which that's a whole huge debate. But, just on the cost structure alone, he was going from, I think, spending like over $300,000 a year to the IBD to now down to like a cost structure of like 60, something
Crazy.
Like that.
Crazy numbers. Absolutely. IBD marks up everything. My E&O was cheaper when I left. All my softwares are cheaper. They mark up. They're trying to make a profit at every single level, right? Because their margins, they're not happy with it. Many of them are publicly traded, right? They're trying to make profit at every single level off of you. So absolutely, that makes perfect sense. It's not just the haircut. It's everything else in your practice. And that guy, that advisor, that guy or gal, they experience that. It's so much more cost effective. I mean, the jump in revenue you will get right away, it's enormous.
Yeah, no, and then just your control over how you charge and how you bill and that sort of thing. Because like for him, he was getting these massive quarterly checks that were screwing up his cash flow planning, versus once he switched over to the RIA, he's now doing monthly billing. And so it's more reasonable. He's getting paid sooner. It's worked really well for him. But at the same time, he wanted that independence, because I have other clients where they're IBD, totally happy with it. They've got a lifestyle practice they like being able to hand off stuff to that. But I think like what you mentioned is realizing like there are different options, and you have to realize which one is the best fit for you and the best fit for what you're trying to build. And then also the best fit for, okay, let's think about exit planning. Like when you're actually going to exit out of this business, what do you want that to look like? And where do you want to go with that?
Yeah. I mean, the biggest challenge when you go RIA is one nice thing that you have in the IBD universe is that you have a ready, set community of advisors and people to talk to. And they say, hey, listen, here's your succession plan. We have someone that's local to you. That's pretty nice. When you leave and go RIA, that kind of leaves, right? But there are many of them out there. You just got to go look for them. And I know there's other groups out there that are trying to kind of find that. But I'll tell you, Catherine, I mean, I have a call, I think it's tomorrow. I have to look at my calendar about these RIAs when they do go, out on, IBDs, when they go to RIA, they want to reach out like, hey, can you help me out? Can you tell me about this? Can you tell me about that? And I will tell you, listen, anybody wanting to, please, reach out to me. I'm happy. I'm always happy to have those conversations. But any other RIA out there that's similar to you, they're going to be more than happy to tell you about this and open up these doors and make these introductions for you, because, it's kind of like the rising tide lifts all boats. The more good advisors we have in the RIA atmosphere, doing good work and all of us connecting, it's the better for all of us, right? Because when you get onto this side, right, and when you look at all the news on this side, it's all these big bad, consolidators that want to bring you in and make you a part of them. And they're some of them look like BDs, but a lot of them are really starting to look like wirehouses. And they're going to scare you the same exact way. The IBD will tell you, you need us for compliance because of all these potential issues that are out there, right? They'll dig you a hole and sell you a ladder. Same thing when you come over here with these large consolidators. You need us for scale and all this stuff. And it is simply not true. It is self-serving. So, go through it, reach out to other RIAs like us. We'll help you. We'll guide you. It's awesome over here. I mean, there is it's wonderful that you could set up any way you want to, but it's also a challenge because you could set up any way you want to. So I'll happily tell them, hey, listen, don't go down that trail, keep this simple and stuff like that. There's a lot of good people out there kind of figuring it out.
Yeah, no. And that's been the kind of the impression that I have, kind of with a foot in both spaces on the client and tax side, is I've noticed that a lot of the RIA firms are just so open and ready to assist each other. And because it is like a free form, you can do whatever you want once you've got all the paperwork in place. It's Wild Westy. So one big question that I have is, so when you see people make this transition, like early on in the transition into RIA, what are some of the biggest mistakes that you see people make, or like pitfalls that they can hit early on into that transition experience? Hey there, Catherine here. Thanks for listening to the conversation. Just wanted to explain a little more about what we do. So I'm a CPA here with Dominion. We're a tax firm that works specifically for financial advisors as they're growing and scaling their practices to help them avoid tax waste, make the right calls, and grow practices that they love. So if you're interested in saving more, you can DM me on LinkedIn with the word guide, and I'll send you over our guide for financial advisors to scale tax efficiently. All my top tips to unlock six-figure savings. Thanks, and keep enjoying the show.
The number one biggest mistake you can make is when you start your own RIA and you get documents from templates from, unnamed in a box, right? to go in there, and they adopt those and sign those, and they think that's good enough. That is the number one biggest mistake you can make, because when you get audited, you're going to get slammed because you're going to have all these provisions in that template that you don't know what they say. And they'll ask you, are you doing that? And you'll say no, because you know it was there. What you do is you go through that with a compliance consultant or on your own, because what's wonderful about it is that all of 90+% of the provisions in there, you don't have to have them in there. You can take them out. Mm-hmm. So it's an exercise of going through is go in there, say what you do, and then do what you say, and don't have stuff in there that doesn't apply to you. So that's the number one biggest thing you could do. And honestly, for those people that like doing business the right way, it's really a huge benefit and learning experience. And then you really learn through it and talk to a compliance consultant. Well, I don't want to do that. And they'll come back to you. Well, then take it out. Oh, really? Right. So maybe even before you go and before you start filing with the state, get all that the documentation, go through, talk to the compliance consultant, and it's an opportunity to build exactly, the practice that you want, put it on your compliance manual, and then you just follow that.
Yeah, that's really good advice. And for anybody listening, if you need a connection to a compliance consultant or an RIA attorney, I've got a number of people that we have for names to recommend, because I definitely agree with that. It's like the same thing on the tax side. Like, you really want to make sure that before you're marching into a certain position on something, or that you're going to do something, you've done some planning work, you know what you're getting into. And just some of the figures that I've seen on the SEC fines for things, especially some recent cases that came out, it's not something you want to mess with. And it's like at the time you're just rushing to get everything set up and like move all the, if you're bringing accounts with you, getting everything moved over, and you're like, okay, well, let's just get this done and move on and get through it. But you really do need to invest the time into.
Let me build upon what you just said, Catherine. It's
Yeah.
exactly like you're saying in the tax practice. And you have clients that go to you and love working with you because, listen, the tax code, right? It's black and white, maybe gray, but they like you. They like your advice. They trust you. You're advising them and telling them how to be compliant and to work within the tax universe. There are so many of you out there who are compliance consultants. You won't believe it. I mean, there are hundreds, maybe not thousands that are out there. So you do not have to go to big blank in a box, right, to get your advice. There are so many consultants. That is so valuable. Because I was a lawyer, so I got my documents together. I went through a couple people early on, then I got to someone I really like, and now it's awesome. She's like you are to your clients. It's how she is to my clients. We have quarterly meetings. She does things for me. She tells me what to do and stuff like that. And it is wonderful. It's not overwhelming. I'm not dealing with some massive, and that really is a huge partner to have. And really interview a few and find the one you like, because that will make your life really, really, less stressful.
Yeah. And it's just, I think for, a lot of people who go independent, I encounter this attitude of DIY, which is really great. And that's what's going to muscle you through a lot of the initial period. But at the same time, when you consider like the time arbitrage of, okay, are you really going to sit down and learn all this stuff? Or how, could you get in another couple million AUM that's going to pay for those fees really easy, and it's going to be something that you're going to get a future return on, versus you trying to decipher these documents or trying to decipher the rules yourself. Like, it's just not a good return on your time investment to go after that. So I've seen that at like that DIY attitude is like a double-edged sword. Especially when it comes down to things like those compliance issues. So beyond the compliance piece, what are some like more maybe like operational or, bringing on staff people or things like that you found to be challenging when you made the switch, or, advice if you could talk to yourself like year 2 in your practice, when you switched over to RIA, like what would you have told yourself year 2 that you now have where you are now?
Yeah, no, that's a great question. That's funny. That's the exact question I ask in my podcast. Like, what would you tell to your younger self? What would you have done? What would you have done differently? Yeah. And so I would say, a lot of it when I was starting out, and I'll give you an example of something that I read on a Kitsy's blog or something like that, where this guy was going on and on in his questions, like, I don't know what CRM to use. I'm comparing these 4 CRMs and blah, 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 blah. And then the response comes, well, how many clients do you have? He's like, I have 2 clients. He's like, what? He's like, that is the last thing you should be, spending the time on. So don't spend any time. I mean, you keep it really simple. Only use what you need, right? Don't go into these long, deep dives about software this or software that. No, keep it very, very simple. Go out and grow clients. And then as you grow clients, you build the infrastructure behind it. If you only have 30 or 40 clients, that's fine. And manage it yourself. As you grow, you go hire someone. You don't need to add all these fancy tax planning or, financial planning until you really need it. Don't buy all that software and complicate your life when you don't have the need for it yet. Focus on keeping it simple, growing the clients, and then you bring the stuff in, because that's exactly what I'm going through now. And like every about year and a half, I'm doing kind of a new tech dive. Okay, where can we simplify? Where can we coordinate and stuff like that? And just to really focus on the priorities that are out there. That's the key. Don't get caught up in all these shiny bells and whistles, which don't matter. Now, people get caught up like that at the IBD side also. Oh, I'm going to adopt this software and it's going to be magical. No, people don't care. It's not nearly as important as you think it is.
Oh, absolutely. That is such good advice. And I'm a big fan of the theory of constraints. And it's such a common, like, it's a common thing I encounter in my industry too of, oh, we need to build all this stuff, but it's like, that's not the bottleneck of where you are right now. Like, figure out where your bottleneck is and attack that. And like, yes, you are going to make future messes for yourself, but you want to get to those future messes instead of just like, oh, well, I'll just keep the current mess here and clean up all this other stuff, until I get there. It's not, you're never going to grow doing that. So that's really, really great advice. And the keeping it simple. I actually had a funny story recently of an advisor who was asking me if he should bring income tax preparation into his firm. And he's probably at like the $2 to $3 million mark. And I said, well, this is probably going to create for you a lot of operational disruption, because income tax preparation work is like a completely different kettle of fish than financial planning. Like, it's just really, everything about it's different. The seasonality, the skill set, the personnel, the software, like, you're going to have to bring all of this stuff on. What if you poured that same amount of energy in just a new client acquisition for what you already know? Like, what would that look like in terms of a revenue generator? And he was like, oh yeah, that makes a lot more sense. Because I'm like, you're tempted, right? Like, you're tempted to be like, oh, well, this adds more value to the clients. But it's like, well, what's the actual margin improvement that you're going to get from that versus should you just increase your pie of clients and then you have the core competency of just the planning? Yeah. Now, like, some people, like you were saying, once you get up to size and you're like, yeah, we have a niche. This is like a desperate need for our niche. We feel like we can bring in a CPA partner or somebody who's going to have an expertise here, and it's going to make it's not going to create operational drag. Then it's a different story. But when you're only at 2 to 3 million, it's like, that's just going to be like you starting up a whole brand new business versus you could easily use that same energy and get yourself to like 7 million without all that effort. So it's always interesting, some of the ideas people have.
And I would add to that, Catherine, because that's a great point. And because obviously if it's an RIA, that's one of the big things. You can have all these different ancillary businesses and kind of do it there. And the biggest one is tax planning. I've wanted to do that from day one, but I've not been able to find the right person. So if you're going to do that, to find the right person, and I'm not going to force it. I've seen other people have these different conversations, stuff like that. So I kind of like, I'm living within whatever the constraints might be. But then when I find the right person and I think it's a good fit, then I'll bring it in. And that's where I'm really, focused on more now, is to find the right people, to bring them in, and they're going to fit and make it work out. If you bring the wrong people in, it's extraordinarily disruptive, as I shared with you before we went on, right? I brought in and lost a succession plan advisor in 12 months. I lost so much money through time. It was extraordinary because it was the wrong person. So if you want to do an ancillary practice like that, yes, that's one, but then make sure it's the right person that fits in for you.
Absolutely. I've had the same thing in the firm. We've had some bad calls. And that's the tough thing about it too, is like, you try to do everything you can. And at the end of the day, people are always a risk factor. Like you can't, personality test everybody out of, some foible that you're not you're going to get blindsided by. Like, there's just no way. But
you'll be ready for the next person that comes in. You'll have learned your lessons. You'll set the expectations better. Yeah. I had to let go of listen, when you're a small firm, right? This was 12, 18 months ago. We were 3 people. I had to let go of one of the people. I mean, I let go of 33% of my workforce, right there. And like, that was devastating. But I came back and I said, no, okay, that can't keep me from wanting to train someone up again like that, but it's do it differently and go slower and go through it, and you learn. And because if you're going out now on your own, whether RIA or IBD, you're going to have a bad hire, right? Yep. Learn from it. Don't let it keep you down. Don't let that bad hire change your direction. Just learn from it and do it better the next time.
Yeah, absolutely. That's very good advice. So, for people that are looking to connect with Steve, I'm going to have his contact information floating somewhere near wherever you interacted with this. Any final thoughts that you have that you'd like to share before we sign off?
No, I just really appreciate your time there. And like I said, probably the best place to reach out to me is on LinkedIn. I'll see the message. We'll set up some time. Listen, there's a lot that's unknown and scary about this. And a lot of us, I'm happy to help people, to give them some guidance to start out. So do not hesitate to reach out like you did to me, right? We're all connecting with each other. How can we, help out? I'm happy to give help.
Yeah, that's wonderful. Well, for listeners, go spam Steve, please. Make him regret those words. But so we'll just end there. I want to say thank you to everybody who listened. I'd love to hear from you myself if you got anything valuable out of the episode, thoughts, ideas, or if you're interested in coming on and telling your story as well. We're going to be doing more advisor stories from just out in the battlefield. What are you seeing? How are things going? What went well? What didn't? So for today's episode, we're going to close out, and I want to thank you all for listening. I want to thank you, Steve, for joining me. And this was the Financial Advisors Want to Know podcast.